And welcome back, folks. I just looked this up while Mr. Pastula was speaking a few minutes ago. And it says here, global life expectancy increases by about 6 years. A study out of England, actually. And here's what they had to say. And I want you to think about this. Global life expectancy for men and women has increased by about 6 years over the past 2 decades, according to one of the most comprehensive studies of global health done so far. The rise in global life expectancy is mainly the result of dramatic advances in health care. In richer countries like ours, longer lifespans are spurred by a big drop in deaths related to heart disease, while the poorer countries see big declines from ailments such as pneumonia, diarrhea, malaria. We are a rich country. We are making such strides. Gene Pastula in the house with me. Gene, and you know this as well as anyone. 2 decades ago, what I had out in the middle of Lake Powell, what I consider to be a minor event, 20, 30 years ago, might have killed me, quite frankly.
Most likely.
And so when you think about that, life expectancy is expanding. You brought up the fact that the insurance industry right now are basing their products on mortality and morbidity rates that we know about today, right? They're not forecasting into the future. I don't think forecasting into the future dramatic changes in life expectancy. But if it's gone up 6 years over the past 2 decades, and you and I are going to be alive for at least 2 decades more, that's going to be at least another 6 years, maybe it's 10 years. And if you're not planning for that longevity risk, you're making a big mistake.
Yeah, their actuarial tables include some metrics for the fact that it's going to get better, because that's the trend, all right? The situation that our folks have to deal with is that today we have pricing that basically says that longevity, the average female in good health will live to like 87, and the average male will live to 84. Okay, but included in those figures are the fact that it's going to get better over the next several years. So that's all taken into consideration, and we get a price today, and we get certain guarantees and all the rest. 5 years from now, those annuity rates are going to be different. 5 years from now, we're going to, as you said, we're going to know more. We're going to have different assumptions. I assume that it will continue to get better. We certainly, that would be the one we would basically plan for. So that means that if one waits until 5 years from now, for example, or 7 years to start thinking about setting up their retirement plan, or putting that in their portfolio in the form of an annuity, I don't think they're going to get the same deal as they got before. In fact,
well, like you haven't gotten the same deal today that you got 5-10 years ago.
Everything that I've seen in the business, except for life insurance rates, because the cost of life insurance has gone down and the creativity of the products has gotten better. So
why is that? Because people are living
correct,
longer.
Yes,
That's exactly why.
Yes. So, but everything else, particularly that we deal with life insurance and longevity being annuities and long-term care. And what we've seen is the products that we have sold and made available that we helped create 25 years ago in the long-term care business are not as good as they were 10 years ago, 15 years ago, or whatever. They're fine. Most people look at them and they're embraced and used and all the rest of the stuff. But I remember, I got mine, like 15 years ago. It can't touch it today. And not just because I'm a lot older and more senile. So at any rate, the area of retirement planning and understanding this mortality risk, if you can get that in your head and understand how important it is and how it's going to be in your lifestyle, not just whether you can pay your rent or buy your food or whatever, but just your level of feeling of security and lack of stress in retirement and being able to enjoy your retirement, getting a paycheck and another paycheck each month in addition to Social Security and whatever retirement plan you have, nothing beats that. And I don't care whether your rate of return is 6% or 4% or whatever, that changes nothing relative to the stress level that people can eliminate with these products.
I brought up the article, Fatal Retirement Portfolio Mistake, Confusing Optimized with Safe.
Huh?
And they bring up, I'll explain it to you during the break. Okay, longevity risk is what we've been discussing, but then there's also sequence risk. Remember what I said a few minutes ago. You retire 1/1/1973 with $1 million and you take $100,000 out plus inflation, you're dead broke in 9 years. You retire in 1982 with the same amount of money, same income with inflation, and 33 years later, you've had that inflation adjusted $100,000 and you've got $4.5 million in the bank. So focusing on optimization is meaningless if you hit the timing wrong. And one thing that's nice about annuitizing a portion of your portfolio is it doesn't care. It doesn't care whether the market's up, the market's down. Sequence risk is avoided.
Correct. And having that part in the portfolio not only reduces the stress level, as I said earlier, but it gives you the opportunity with other monies that you have to invest those properly instead of having to worry about, I'm older now, I don't have as much time. One client told me he doesn't even buy green bananas anymore because it may not get to the point where he can eat them. That whole concept there of having that stability in your portfolio totally eliminates the sequence of return risk and allows you to operate your portfolio in a much more intelligent fashion.
Now, the last risk that they talk about in this article, stupidity risk, which I know you know this one well.
Oh, yes.
He says this: such allegedly safe withdrawal rate provisions, and you were alluding to this earlier, that both consumers and advisors will make and continue to make good choices throughout retirement. What we know about cognitive and behavioral biases, as well as the real-life actions of consumers and their advisors during periods of market stress, doesn't suggest, rather it screams that we should be skeptical about the ability of people to make good decisions and keep making good decisions when the going gets tough. Here, they're chastising not only the consumer, but those advisors you work with too.
Yeah, and it's not the advisor's fault necessarily. If you are, say, 70 years old or 75, and you are using an advisor to help you manage the portfolio and make decisions about how to take money and what have you, and that advisor is, let's say, 50, which is, that individual's perhaps been in the business 20, 25 years. Very, very intelligent, well-educated, a lot of experience and what have you. But he looks at the world through the eyes of a 50-year-old. Now, I know this is to be true because I used to be 50 and I looked at the...
You were 50 a long time ago.
It has been, and my point, today I'm over 70 and I look at things a lot different today than I did. And I watch, and of course, as you know, we do a lot of business with advisors all over the country and educate them into these ideas. And I watch them, and in all sincerity and, in fact, with intelligence and experience, they provide advice to their clients. Doesn't make their clients feel better. It doesn't make their clients get less stress. And in fact, it can put it in a situation where it puts it more at risk.
Thank you, Gene. We didn't get a chance to get into the long-term care risks, health care risks. But here's what I want you to do, folks. This is so important. Get the information in your hot little hands. Go to safemoneymonitor.com. Gene runs that website. He monitors all of the safe products that are out there, safety products, whether they be annuities, long-term care, life insurance, all of that. safemoneymonitor.com. Let's go work on our stupidity risk today.
Yeah, I'll do that.
All right, we'll get some pizza. That's pretty stupid, but it sure tastes good.
It certainly does.
I'll take a break on that note. Come back. More of the Ray Lucia Show. Don't you dare touch that dial. Emails are next.